Good morning and welcome to CPM Group's 2019 Platinum Group Metals Yearbook launch. I guess this is the 33rd year that we've done this as CPM Group, although these reports extend back to 1981 when we were the research department at J. Aron. Got a lot to cover today, so we'll dive into it. As is our tradition these days, I'll give you some introductory overview commentaries, and then I'll pass the screen over to Rohit Savant, who is our Director of Research and Vice President for Research and the main author of the PGM report. And then he'll give it back to me for the miners, and we'll open it up for questions. Let me just sort of see how I actually advance this thing. We always have to thank our sponsors and partners. We have 3 partners in China: the China Gold Association, China National Gold Corp, and Jingyi Gold, who are our partners. They are responsible for translating and distributing the report, the Platinum Report Yearbook and the Gold Yearbook in China, in Chinese. And we've been doing this for many years with them now. We're very proud to have them as sponsors. As partners in China. In addition to that, we have a group of sponsors from the rest of the world, a heavy focus on companies that provide investment products and investment advice and services: Noah Capital Markets in South Africa, Monex Precious Metals in the United States, and Kitco Metals. We have Group 10 Metals, which is a very interesting Canadian exploration company that has properties adjacent to the Stillwater mines in Montana, as well as some interesting exploration properties in the Yukon. And then we have a variety of refineries, including Umicore and Sabin, and Kitco Metals is not only a information provider and investment provider, service provider, but also a refiner of precious metals. Umicore, Sabin, Kitco, and the Institute of Scrap Recycling Industries, with which we've worked for many years. My first slide that I'm going to talk about substantively is the platinum price. And I guess we have the big theme in this year's report is that platinum and palladium have really moved their own, they've gone their own ways in 2018. Just to some extent a continuation of what we've seen over the last the previous 2 years, 2016, 2017, that, you know, platinum and palladium really went their own ways in terms of demand, supply, and price. But that a change is likely to come in these markets. There are changing macroeconomic and political events that are changing the environment that affects these markets. And then we also have changing fundamentals, supply and demand, especially demand, I believe, is changing. And I think that you could fairly say that the way that the platinum mining industry is behaving is also undergoing some major changes, which will be reflected in perhaps a reversal in the trends that we've seen over the last couple years in platinum and palladium prices. Platinum prices fell. They've dropped about 8.2% on an annual average basis last year to about $818. They've been bumping along around that lower level over the first half of this year. We do expect them to pick up, but we do think that the pickup may be slow and it may be later than a lot of people expect. But we do see platinum prices pretty much at the bottom of the market. One of the reasons we see that is we see that while the platinum market remains in a surplus that really extends back to about 2003, the surplus has contracted sharply, and it's continuing to contract sharply, and it's dropping again in this year. You can see that from 2002, 2003 into 2010 and 11, there was an enormous surplus. Now this is a surplus of total newly refined platinum, less fabrication demand. So those surpluses, which got as high as 900,000 ounces a year toward the end of that bull market, those reflect platinum investors buying platinum, bidding the price up because they thought the price was going to rise. They were bullish on platinum. It was a good time economically in many ways for platinum and platinum using industries, and investors bid that up. That demand ended really in 2010, 2011, and we saw a drop into a deficit the following year as investors pulled back from buying, and that was reflected in the price of platinum. Surplus reappeared in 2013. 2014, we had a 6-month strike in South Africa's platinum industry, which led to a large deficit. And since that time, we saw a recovery in supply in South Africa and elsewhere, and we've seen a diminished growth in fabrication demand. So we had a surplus reappear in 2015. It contracted in 16, 17, 18, and it's contracting further this year. We had about 216,000 ounce surplus that we estimated in 2017. That contracted to about 197,000 ounces last year. We have a surplus that we're projecting at around 115,000 ounces this year. And in our other reports that go further out, we have a further contraction to around 60,000 ounces projected for 2020. But that actually doesn't appear in the yearbook. The yearbook has projections for supply, demand, price in 2019, but not 2020. So we're seeing a tightening of the platinum market, even as the fundamentals have not been all that supportive up until now. Inventories are very high, and they rose again last year. Inventories, by our estimate, are probably around 13.6 million ounces by the end of last year. You can see from this chart that a significant portion of that is held by investors. The purple part is the ETF holdings, and the orange part are the estimated unreported investor holdings. Those have been large. Really, they started growing in 2002. And they have been large, and they continue to grow. We have seen some investors buying platinum, but a lot of the surplus that we've seen over the last couple of years has not been taken up by investors. And the yearbook talks about, and I think we'll cover this in greater detail, the yearbook talks about the importance of understanding who it is that's taking up these surpluses. If investors are bullish on platinum and they want to buy platinum and they absorb these surpluses, it'll show up in rising prices. If investors are not bullish, if they're actually selling, or if they are at least not buying platinum, what you'll see is that those surpluses are left over for the industry to hold and for financial market makers. And if it's left to the financial market makers to absorb metal that's in surplus of fabrication demand, what you'll see is a platinum price falling. So over the last few years, we've seen surpluses and we've seen falling prices, which suggests that those surpluses have been left over more or less for market makers to absorb. That may be changing over the next several years. It's probably a tendency that will only slowly emerge in 2019 and 2020 and 2021, however. We don't expect it to happen quickly. Palladium is a study in contrast. The price rose 41% in 2017 on an annual average basis. It rose another 17% in 2018. It averaged $1,015.81 last year. That was a record price for the palladium price, and it rose sharply higher in the first half of this year. We think that that probably is moving toward a peak and that we may see that change. But the reality is that the palladium market remains very tight. We are seeing tight market conditions. Again, large surpluses in the period, in the case of palladium, really starting around 2001, when we saw an enormous amount of Russian metal come into the market in 2001. much of which was picked up by, well, initially a market maker who then sold a large portion of it off to some hedge fund managers and private wealthy individual investors. But we saw large surpluses from 2001 really into 2010 to 2011, and a lot of that metal, again, was absorbed by investors. There is metal that has accumulated in the palladium market over that time, and I'll show you that in a second. But really, since 2012, we've had a much tighter market. We've had some surpluses that were a fraction of the size of previous surpluses in 12, 13, and 15. And we've had deficits in 2014 during the strike, and 2017 and 2018. And the palladium market is much tighter. And again, Rohit will go through the details behind all of this. But if you can see, you know, in 2015, after the strike, we still had a 237,000 ounce surplus that we were estimating. That dropped to only 19,000 ounces in 2016, which is within the margin of error in estimates of supply and demand data for palladium. So you basically had a tight, balanced market. We believe you moved into a large deficit of about 152,000 ounces in 2017. It had contracted a little bit in 2019 to about 90,000 ounces, but it may disappear and show up as a small surplus of about 31,000 ounces in 2019. Again, 31,000 ounces is probably within the margin of error for supply and demand estimates in these very secretive markets. But you have a much tighter market in palladium for a lot of fundamental reasons. That said, you have enormous stocks in palladium, and those stocks haven't really been moving. Large inventories in precious metals are meaningless to the price unless they're in motion. You can look at gold, where you have 1.1 billion ounces of central bank gold and a couple billion ounces of investor metal. You can look at silver, where you have a couple billion ounces of investor metal. You can look at platinum and palladium. And if that metal is not being added to or sold back into the market, it's really price neutral. And to some extent, what we've seen over the last couple years is a great deal of price neutrality on these inventories. You can see here again, the reported ETF holdings fell sharply in 16, 17, 18, but the unreported estimated inventory holdings of physical palladium by investors actually held up and rose a little bit. But what we've seen is that after the price fell in 2014, 2015, what we saw was that those people who were holding inventories of palladium held on to them. And even as the price of palladium rose sharply in 2017 and 2018 and again in early 2019, we did not see a lot of these investor inventories being sold. We didn't see long-term investors. Some of these people, as you can see from here, have held the metal since the early part of this century, 2002, 2005. Some of these people actually held metal since the 80s. And they haven't really sold, partly because they're seeing the price rise. And investors tend not to sell into a rising market. They wait until they see the price peak or actually start falling before they sell. So what we've seen over the last couple of years as the price has risen is that a lot of investors who have held this metal for many years are waiting to see how high the price goes before they sell. And we really haven't seen those sales appear in any significant way up until now. Additionally, you have other investors who poured into the market in 2017 and 2018, attracted by the fact that the price was rising. So you've got a pretty interesting tight market. Rhodium is the third metal, and it actually has been one of the high flyers. In 2018, the price rose 132%. It got up to $2,221 on an annual average prices. That was up from $956 in 2016, and it was up from a cyclical low of around $689 in 2016. It's the highest level since 2010. And what you see with the rhodium price, and we only take this back to 1992, but we saw the same thing in 1981. We saw the same thing in the run up to that $2,200 level that this chart starts at in 1992. You see that the rhodium price can rise very sharply as fabrication demand is tight and inventory holders stop selling. And our view is that we are now in probably the early stages of that kind of ramping up in rhodium prices. And the reason we say that is this. The rhodium market, and rhodium is a byproduct of platinum and palladium and nickel, the rhodium market has been in large deficits for decades, ever since it started being used in auto catalysts in 1980-81 model year in the United States. And as Japan and then Europe and China and other countries have come into the auto emission standard umbrella, you've seen an increase in rhodium use in auto catalysts. And the rhodium supply is relatively fixed because it primarily comes from as a byproduct of other metals. And we've got large deficits, and we have large persistent deficits. 87,000 ounces estimated in 2017, 85,000 ounces in 2018, and another 80,000 ounces this year. So we have a rhodium market that we see as being pretty tight right now, and we see it continuing to be tight, and we think that's going to be reflected in the price. Now, I'm going to pass the screen over to Rohit and let him talk in greater detail about the fundamentals that lie behind this. And then I'll come back later and talk about the minor metals.
Thank you, Jeff. I'm going to be speaking about the supply-demand fundamentals for the three PGMs. So let's start here with platinum supply. Total platinum supply stood at about 7.4 million ounces in 2018, which was up about 1.7% from 2017 levels. The increase that we saw during 2018 was driven in part primarily by an increase in mine production. Meanwhile, what you saw was a decline in scrap supply during the year. So mine production during 2018 was up because of higher output in South Africa and the US. In South Africa, what you saw was a ramping up of Northam's Boysondale mine, as well as Royal Bafokeng's Styldrift mine. And in the US, you saw an expansion at the Stillwater mines. So collectively, these mines helped to boost platinum output during 2018 in these two countries. Secondary supply, meanwhile, was down during 2018 to about 1.2 million ounces, which was off about 2.5% from 2017. So what we've been seeing in secondary supply is a general downward trend for several years. And this is primarily because of lower quantities of platinum being recovered from scrapped auto catalysts. There's reduced amounts of platinum coming out of auto catalysts because of thrifting over the years. That is the reduction, per unit reduction in the amount of platinum being used in these catalysts, or partial substitution with palladium, or in some cases, even complete substitution with palladium over the past few years. So the metal that's coming out of these catalysts now contains a lot less platinum than the older catalysts did. When you look at mine production, while you did see an increase in 2018, mine production too has been in a broader declining trend after reaching a peak of about 7 million ounces back in 2006. So in 2018, global mine production for platinum was actually off by about 12% from its peak in 2006. And we've really seen a decline in platinum mine production across regions, with the exception of Zimbabwe, where you saw an increase in platinum mine supply of about 50% since 2006 through 2018. But pretty much everywhere else, we've seen a general decline in the amount of metal coming out from these countries. And the biggest decline, or the most notable decline of platinum mine supply, is from South Africa, uh, which is faced with numerous issues. You've got a mining industry which is faced with high costs, difficult mining conditions, labor unrest, unreliable supplies of electricity. So there's a variety of factors that have contributed to this general decline in platinum mine supply out of South Africa over the past several years. The one thing that has been working in favor of South African platinum mining is the weakness in the South African rand versus the US dollar. So mining companies around the world, and this is general practice across mining companies, price their metal in US dollars, but have their costs largely in domestic currencies. So weaker domestic currency would raise revenues and result in subsidizing your nominal costs. So what you're looking at here, as you can see, is that the PGM basket price in dollar terms actually peaked. So if you look at the chart on the left-hand side, the dollar term, in the PGM basket price in dollar terms, it peaked at about 1570 back in 2008, and was down to about 1040 in 2018. So between 2008 and 2018, the PGM basket price in US dollar terms is actually off about 37%. During that same period, you've seen the Rand basket price move from strength to strength, and it was actually at a record high Rand, like 13,700 Rands for the PGM basket price in 2018. Which is interesting, and it shows how much of an effect the weakness in the currency has had, because you had record PGM prices in 2018 in Rand terms when the platinum price was actually, which accounts for the largest part of the basket, was actually at a 10-year low. So the boost in revenue that the mining companies in South Africa have been getting from this weak Rand, coupled with government pressures to keep mines operating, has resulted in platinum supply declining at a much slower pace than that which is warranted by the metal's fundamentals. And since supply has been declining at a slower pace than needed to balance the market, it has resulted in an ongoing downward pressure on the dollar price. So we think that this weakness in the Rand, while it's been helping the mining companies to a certain extent, it has actually had a much more negative impact on the metals price. When you look at it in dollar terms, you can see the impact of that excess supply coming on. So what you're looking at here is capital expenditure in South Africa's platinum mining industry. It had risen to a record high 21.5 billion Rand in 2008 and drifted lower since then, bottoming out at about in 2016, which was again a trend that we saw across the mining sector, where you saw a run up in capital expenditure during the commodities bull market, and then a pull out of investments in the mining industry in general. Since 2016, though, we have been seeing a recovery in the amount of capital expenditure in the South African mining industry. So in 2018, after bottoming out in 2016, in 2018, there was about 18.5 billion Rand in capital expenditure in the South African mining industry, which was up around 70% from the 2016 bottom, when you look at it in Rand terms, and about 63% up from the 2016 bottom when you look at it in dollar terms. And during that 2-year period, when you did see an increase in capital expenditure, it was a very broad-based increase. It was not necessarily specific only to a few companies. The two companies that did stand out as major spenders were Northern Platinum and Royal Bafokeng, as they were ramping up production at their mines. This increased their capital expenditure. But even outside of those two companies, with the exception of Lonmin, which was not increasing capital expenditure, you did see capital expenditure increases at all of the major miners in South Africa. In 2019, we do think that there's going to be a bit of a pullback in the bit of a reduction in the amount of capital expenditure with both Royal Bafokeng as well as Northern's mines now fully operational. So we don't expect a lot of capital expenditure towards those mines. But that said, you do have Anglo as well as Sibanye forecasting an increase in the amount of capital expenditure. So what we're seeing is the mining companies have come back and are willing to increase their expenditure both towards sustaining as well as to a smaller extent project capital. But this is another factor in addition to the rand, which is going to be supportive of supply in the medium to longer term. So not necessarily a good thing for the price. So moving on then to platinum fabrication demand. Platinum fabrication demand, it's been crawling up higher over the past several years, and in 2018 was finally back to levels that we saw in 2013 of about 7.2 million ounces. Demand during 2018 was supported by strong demand from the commercial vehicle market. That was the main factor because it uses platinum intensive catalysts. And then there was also some support for platinum fabrication demand during 2018 from the petrochemical refining as well as the glass industry. During 2019, we are forecasting a marginal reduction in fabrication demand relative to 2018 levels. So as I mentioned before, one of the biggest positives for platinum fabrication demand during 2018 was the robust growth in demand for commercial vehicles across major auto markets during the year. We saw a pickup in global economic growth during 2017 and into the first half of 2018, which gave businesses confidence to increase capital expenditure, which positively impacted demand for commercial vehicles. That seems like it's changing now. The macroeconomic picture has turned less supportive of growth, economic growth, since the second half of 2018. And while we don't expect a recession this year or even maybe next year, global economic growth this year is expected to be slower compared to last year. And what we're already seeing is that if you look at this chart, most of the major markets are still showing healthy growth, but it is growth that is slower compared to periods during the same period in 2018. And also in the case of China, you actually saw demand being lower on a cumulative basis for the first 5 months compared to 2018. So there are signs of weaknesses developing here. We did see China's demand decline in January and then rebound again in February, March, April, and then slip again in May. We don't necessarily see a lot of strength coming out of the Chinese commercial vehicle market this year. And we potentially do expect a further slowing in growth in commercial vehicle demand for the other regions as well, as economic forecasts tend to get more clouded. In addition to slowing demand for commercial vehicles, the increased use of SCR catalysts and declining market share of diesel passenger vehicles are other factors which we think will weigh on demand for platinum. And these have been factors that have already been negatively impacting platinum fabrication demand. They've been one of the main reasons why platinum fabrication demand has not been rising in a strong way over the past several years. SCR technology is now being more extensively adopted. It's a good catalyst to meet the tighter emission standards. And with the RDE test, which is the real driving emissions, becoming applicable to all diesel vehicles starting September 2019, there is going to be a need for SCR catalyst to be fitted to all diesel vehicles. And we think that this continuous monitoring of emissions, which would be an outcome of these RDE tests, um, will prompt OEMs to increase platinum loadings uh, to be on the safer side. So in that sense, SCR technology, which has been fairly negative in the past for platinum, may be less negative going forward with these tests now being put into effect. Put into effect across all vehicles. They've been in effect since late 2017, but now it's going to be applicable to all vehicles, all diesel vehicles. In addition to the SCR technology, one of the main things you've been seeing, and which has been a major headwind for platinum fabrication demand from the auto sector, has been the reduction in market share for diesel passenger vehicles in Europe and in India. They've been declining for different reasons, but nonetheless, there has been a decline in market share. We do anticipate that market share is probably going to continue declining over the next several years, but the rate of decline will potentially slow compared to what we've seen in the past few years. So that should be less negative for platinum going forward. Obviously, with the price discrepancy that we see between platinum and palladium, the question arises about substitution of palladium with platinum. And on the basis of price, there is a very strong case for OEMs to switch from palladium to platinum use in AutoCADs. Platinum moved to a discount to palladium back in October 2017, and really so it's been several months at this point that platinum's been at a discount to palladium. Though initially the discount was fairly small, and it widened to some extent to about 7% back in May 2018, and then it really widened after that, getting to as high as a 43. So platinum was at a 43% discount on average to palladium in March this year, and now it's at about a 37%. So the discount is meaningful at this point, and so on a price basis, OEMs definitely have an incentive to move away from platinum to palladium. But there is another issue related to emission standards and emission regulations, and the increased scrutiny with regards to these emissions, which makes OEMs a little bit hesitant to change the formulations of their catalysts. So over the past decade and a half to 2 decades, you've seen an increased optimization of palladium rhodium catalysts to meet these tighter emission standards. So while it is still definitely possible to bring back platinum into the catalyst formulations, the OEMs are still fairly hesitant to make that switch because of the large costs associated with potentially failing on a test or any kind of a recall. So there's a bit of a hesitation there. We do think that if this discount continues, you will see a shift towards platinum, but it may not come as soon as the price would suggest it should come. Platinum jewelry demand is another major source of demand for platinum, and it's been fairly weak over the past several years. It came off a little bit last year. It was down about 0.1% in 2018 relative to 2017 at about 2.3 million ounces. A weakness in China's demand for platinum jewelry is the primary driver here. Weaker economic growth, reduced demand for discretionary purchases like jewelry, and that's really what's been weighing on platinum jewelry demand in China. But the lower platinum price has had a somewhat positive impact on jewelry demand in that the lower platinum price has helped to improve margins for jewelers who are continuing to sell platinum jewelry as a premium product. So that gives them healthier margins, and so encourages them to promote or push platinum jewelry to end consumers. You're also seeing healthy economic conditions in the US over the past several years. So that's boosted demand for diamond jewelry. Platinum is a preferred metal for setting diamonds because of its hardness as well as its resistance to corrosion. So that strength in the metal as a good metal for setting diamonds has also helped to boost platinum jewelry demand in the US. And then you've seen active promotion of platinum jewelry in countries like India, where you are beginning to see some demand. You're actually seeing a strong growth in demand, but the volume of demand is still fairly small. In the urban areas where platinum is being promoted as a desirable metal for jewelry making. So you are seeing growth in countries like India for platinum jewelry, which is offsetting. So these factors have been offsetting to some extent the weakness in demand that we're seeing in China. So with that, let's shift gears to investment demand. After being net sellers of about 240,000 ounces of platinum in 2018, investors have turned large net buyers of platinum via ETF products during the first 6 months of this year. And during that first 6-month period, you've already seen investors add back around 690,000 ounces of platinum to their holding. So these investors clearly potentially see limited downside for prices from present levels, and they've been seeing that prices have been forming a base at these lower levels now for several months. So that probably gives them a lot more confidence to buy into the metal as a bargain purchase for going forward when prices could potentially rise. On the other hand, institutional investors on the NYMEX, which is the chart you're looking at right now, seem to be a lot less positive about the metal. Last year, they turned net short. And even this year, while they dipped into net short territory briefly, and they're out of it now, there's still a very large volume of short positions held by these investors. So they seem less positive on prices in the near term, and this kind of helps to explain to some degree the weakness that we've been seeing in platinum prices. So with that, let's move on to palladium. Total palladium supply reached a record 9.7 million ounces during 2018, which was up about 1.6% from 2017 levels. The record volume of refined metal during 2018 was driven by an increase both in mine supply as well as secondary supply. Mine supply has been up for the second consecutive year in 2018. It was up to about 7 million, a little over 7 million ounces, which was up 2% from 2017 levels and was the highest level of mine supply since 2007. When mine supply stood at about 7.2 million ounces. Unlike platinum secondary supply, in the case of palladium secondary supply, you've actually been seeing a trend of increasing recoveries, and that's for the reasons for that are the exact reasons why exact opposite reasons for why you've been seeing a reduced amount of recovery of platinum from autocatalysts. So you have strong prices here. You have palladium rich autocatalyst feedstock, and you also have stricter regulations surrounding electronic scrap. So all of these factors collectively have resulted in an ongoing increase in the amount of palladium that is being recovered from catalysts, electronics, and there's greater incentive because of the higher price. So palladium fabrication demand has been strong, and it continued to rise for the 9th consecutive year during 2018. fabrication demand touched a record high 9.8 million ounces during the year, which was up about 1% from 2017 levels. Now, demand growth had slowed in 2018, which was in part because of the growth being from an extremely high level, and in part because of loss of growth momentum in the passenger vehicle market. So demand was supported in 2018 to a large extent by strength in the electronics sector and a growing market share of gasoline engine cars in Europe as well as India. So in 2019, fabrication demand is forecast to slip slightly, but despite the softness that we're anticipating, demand is still expected to be at extremely high levels. So it's not a sharp pullback, but it is a change from what we've been seeing over the last nearly decade of consistent increases in fabrication demand. So as I said before, one of the primary factors that weighed on palladium demand during 2019 was the slowdown in demand for passenger vehicles. And you saw this most notably in the US and China, where demand growth has slowed. And you're continuing to see that in 2019 as well. So into the first several months of 2019, you are seeing a pullback in the amount of demand for passenger vehicles in these two very large markets, both of which use primarily gasoline engine markets and therefore use palladium intensive catalysts. Now, there are several reasons why sales have slowed in both these markets, the most important of which we think is the topping out of the current demand cycle. You've also got macroeconomic reasons for the pullback in demand, especially in China. And monetary stimulus, we think, will help to slow the declines, but is unlikely to create strong growth in demand, at least over the next 6 months, primarily because of that topping out of the current demand cycle that we just spoke about. One thing that is positive is that both the markets are undergoing emission standard tightening, and so that's something that should help to provide support to palladium demand and offset to some degree the weakness that we are expecting in volumes of sales in these two countries. Another factor that's positive for palladium fabrication demand is the size of the vehicles that are being sold in the US. So clearly, as this chart shows, there's a trend towards, in the US, towards people buying larger cars, light trucks. And this typically tends to result in a larger catalyst and, as a result, more loadings of PGMs per catalyst. So this is a positive factor for palladium fabrication demand, in addition to the tighter emission standards that are ongoing right now. What you're looking at here is semiconductor sales. They reached a record high last year. There's been a pretty sharp pullback in the first few months of this year, which was somewhat expected as markets kind of work through the inventory that was built up over the end of last year. Another factor that we think is possibly going to negatively affect demand from the electronics sector is the trade tariffs that are being imposed by the US on China. So that's probably going to result in some shifts in supply chains, which could cause some disruptions and have, in the medium term, have a bit of a negative impact on this particular sector. Now, the electronic sector, while much smaller than, in terms of demand for palladium, much smaller than the auto sector, it is still the second largest source of demand, accounting for about 15% of total palladium fabrication demand. So palladium ETF investors continued to be net sellers of the metal in 2018. These investors have essentially been selling through the entire price rally. We can see from the chart on the right hand side that large volumes of metal were absorbed into these products during 2010 and 2014, and prices today or even last year were significantly higher than where they were in those 2 years, providing each of those investors a fairly healthy profit. And since commodities do typically tend to go through long cycles, a lot of these investors may not be willing to hold on to their inventory. These particular investors may not be willing to hold on to their inventory for the next run up in prices. So you are seeing that these investors have been selling out of their metal and taking profits over the past several years. And we've seen this continue into 2019 as well. So that let's move on to rhodium. Total rhodium supply has largely been flat around 980,000 ounces since 2015. Total rhodium supply was around these levels in 2018 as well. Like platinum, rhodium mine production too has been in a declining trend since 2006 when it reached a record high. And this is not surprising because a vast majority of rhodium mine supply comes out of South Africa, which is where a lot of that decline has occurred. That said, a lot of the weakness in mine supply has been offset by an increase in rhodium secondary supply. So unlike in the case of platinum, where you've been seeing a decline in mine production as well as secondary supply, in the case of rhodium, while mine production has been coming off, rhodium secondary supply has been fairly healthy, and so has helped to offset some of that weakness in mine supply and kept total supply flat. Rhodium fabrication demand rose to a fresh record high of about a little over 1 million ounces in 2018, which was about 1% higher than 2017 levels. This was the second consecutive year. This was the second consecutive year that rhodium fabrication demand rose to a record level. Healthy demand from the AutoCAD sector was the primary driver of rhodium demand in 2018. And demand from the glass sector has probably been one of those sectors which has got hurt from the increase in price that we've seen in rhodium. Tightening emission standards, which are particularly focused on reducing nitrogen oxide emissions, have played an important role in driving up rhodium demand from AutoCADs. The slowdown in passenger vehicle sales during 2018 has, as it did impact negatively palladium demand, has also negatively impacted rhodium demand. But to a large extent, that weakness was offset by these tighter emission standards, especially in the US and China, where the Tier 3 emission standards in the US, which were implemented in 2017, are expected to be fully phased in by 2025. And in the case of China, the China 5 emissions, which were also introduced in 2017, will be fully phased in by 2020. So these tightening emission standards are one factor that we think will continue to support rhodium fabrication demand in the near term. So with that, I'd like to pass this back to Jeff to speak about the minor PGMs.
Thank you, Ro. Thank you, Ro. And I'm going to talk about the 3 minor PGMs, as they are known as. And you're going to have to excuse me because I'm having a little bit of a technical issue here. Not being able to see what exactly. Okay, I think you can see a chart of ruthenium. There are 3 metals: ruthenium, iridium, and osmium. Ruthenium is used in a variety of chemical catalysts for making chlorine and chlorine products and some precursors for various plastics. It's also used in hard disk drives to control the heat and size variation, overheat of hard drives. And well, hard drives are disappearing from personal handheld devices. They're still very much important for the internet and for larger computers and all. And what we've seen is that ruthenium prices have risen very sharply over the last couple of years. They rose about 114%. They more than doubled in 2017 to $75 an ounce, having been down about $35 an ounce in 16 and early 17. And then they rose another 224% to average $245 an ounce, $44 an ounce last year. And they rose basically into early 2018, and they've stayed high ever since. What we're seeing with all of these metals, and it's true with ruthenium as well, is that there are a number of new uses: catalytic, electronic, electrical. One of the things that ruthenium and iridium are both being used on is water purification systems, both on land and at sea. There are laws that have been passed that ships at sea can no longer disgorge untreated bilge water. So you are using ruthenium and iridium in catalytic applications to purify bilge water on ships before discharging it back into the ocean. So you're seeing a lot of smaller uses that are coming along in ruthenium and iridium, and to some extent with osmium as well, which have boosted fabrication demand and consequently as being seen in higher prices. Iridium is also seeing a number of new uses, and we've seen the price rise very sharply over the last couple of years. The price averaged about $1,291 last year, which was up about 43% from the year before. And it's maintained that high level around $1,400–1,500 an ounce into the first half of 2015. And again, you're seeing a number of uses: electronic, catalytic, water purification systems, and electrical systems that are using iridium, and that's boosting demand. So use in iridium is about double what it was 15 years ago. And my last chart is osmium, which has actually been relatively stable. The price has basically traded $350 to $400 an ounce since around 1990. It's used in catalysts making steroids and a few other products. And that is the last slide. I'm going to go back to iridium because it's a little bit more interesting to look at while we talk. But we're going to open it up for questions now for either Rohit or for me. And I see at least one question here. Do you think better BEE fundings could, I'm trying to see, it says could satisfy, but I'm not quite sure what that means, satisfy what. I suspect that actually relates to whether BEE funding could satisfy the CapEx needs within the South African mining industry. Rohit, do you want to take that question, or shall I? Hello, Rohit?
Yeah, I can let you take it.
Okay. Oh, you'll let me take it. Okay, thanks. It's a tough question because I think that the South African platinum industry is facing an enormous range of problems. And to be honest, these problems have been with the South African platinum industry for about 25 years now. It's facing a number of cost issues. It's facing labor issues, safety issues. I think BEE funding can have a significant role in solving it. It's interesting to see, it will be interesting to see how the Ramaphosa government addresses some of the issues that the South African industry is facing, not just the South African platinum industry, but all industries. South Africa has a tremendous amount of issues that it needs to deal with, many of which were neglected under the Zuma government. And it's going to be interesting to see how Cyril Ramaphosa handles these things. I have watched him since he was a gold miner in the mid-1980s, organizing the National Union of Mine Workers while it was illegal for blacks to have a union. I think he's an incredibly smart and ethical person. And it's going to be interesting to see how much he can manage there. BEE funding is definitely a part of it, but you're going to need foreign capital coming into the South African industry. And for foreign capital to come into the South African industry, and really for BEE funding to come into the South African PGM industry, you probably need a much more rationally managed platinum industry. The platinum industry has gone through an extended period of time where it hasn't necessarily managed itself well. I made the comment at the outset that we are seeing fundamental changes in the way the industry is looking at its markets and looking at itself. And I think those changes have further to come. Any other questions? I'm having trouble seeing some of these questions. One of them, which seems to say, "Dear all, do you think the strikes? Do you see strikes again in the South African mining industry? Was the reason last year at Stillwater low wages, safety issues, etc." The potential for strikes in South Africa exists. The strike in 2014 was ill-conceived battle on both parts. The South African government and society and unions and mining industry have all moved on significantly since 2014. So I'm not sure that we will see that kind of strike again in the future. But the reality is that you have a number of problems within South Africa's PGM mining industry, that management, labor, and the unions. And I always distinguish between the workers and the unions because there are sometimes great differences in the motivations and desires of the workers from the unions that represent them. I think all three of them have to come together and work to try to make for a more viable industry in the context of the social and political and economic consequences to the broader nation. That's a really big order. So I think that there will be problems and disputes in the future. I don't know that you'll see the kind that you saw in 2014. See if there are any other. Which metal do you think has the most potential for higher prices in the second half of 2019? Ro, you want to handle that one, or should I?
I can take that one. Just for the second half of 2019, we think that palladium is probably going to continue to be a metal that potentially rises higher. We don't see palladium prices rising significantly from present levels. As Jeff mentioned earlier in the presentation, we're probably coming close to a top with regards to palladium prices. The fundamentals are shifting slightly. There are risks to what can happen to palladium. And again, if we're just talking about the next 6 months, palladium is probably going to remain the stronger metal between palladium and platinum. But if you look a little bit longer term, you might start seeing a sharper move up in platinum once you start seeing that substitution away from palladium into platinum, and potentially see possible disruptions to supply on the mining industry in general in South Africa. So medium to longer term, you definitely have a lot more potential for platinum. Over the next 6 months, palladium probably remains a stronger metal. It runs a lot of risk, especially if you start seeing multiple declines in passenger vehicle demand, or you actually get some views about the shift from palladium to platinum by some auto catalyst manufacturer. So there's no need for them to make any such announcement, but any announcement of that nature could ultimately result in palladium prices coming down.
Well, you're starting to break up there, at least on my side. But the follow-up question is, would it be correct to say that the palladium price action is currently in a bubble? You want to address that one?
I mean, I wouldn't think that it, palladium prices have obviously risen extremely strongly. I wouldn't call it a bubble because they've risen on fundamentals supportive of those higher prices. Uh, it does look a little bit overextended at this point. So you could see deep periods of corrections like we did in 2018, but then you could prices go right back up. Um, I think strength in palladium prices right now is supported by fundamentals. Um, yeah, I don't know if you have something to add to that, Jim.
Yeah, I would agree with you, obviously. But yeah, I think that there are some bubbleistic characteristics to the palladium market. But if you look at it, there are very clear fundamentals, both on terms of longer term supply and demand trends, the reduction in the deficits, the behavior of inventory holders. I think that there are a lot of fundamentals that are lying behind the palladium market where in comparison to what you might see as bubbles in other financial markets like stocks or bonds or real estate at times. Um, the next question is, how will the US versus Russia Cold War and Trump's sanctions on Russia affect Russian platinum and palladium supply? um, the Russian government, going back to Soviet times, has always sort of tried to decouple its commercial relations from its political relations. The United States and Europe don't always allow it to do that. But what we saw during the Cold War between the Soviet Union and the United States, and what we've seen since the collapse of the Soviet Union and the emergence of an independent Russia in 1991, has been that they will try to decouple it. You will hear people in the United States and Europe talk about, well, you know, given the Trump sanctions and given hostility toward the Russian government by the United States and to a lesser extent EU and UK governments, that the Russians may withhold their platinum and palladium, but they've never done that, and they tend not to do that. And given the nature, the global nature of these markets, I don't think that they will do that because it's not in their best interest. So, you know, that while that risk exists, it hasn't ever been manifested before on the part of Russian withholding platinum and palladium, and I doubt that it will be this time. That said, you know, the sanctions not only against Russia but against other places and tariffs have definitely had a negative effect on overall economic conditions, including vehicle sales in China, and that's probably going to continue to have a negative effect on the overall market, but not because the Russians are withholding metal. That's the last of the questions I have here. If are there any other questions? If so, you can type them in. You should have a place on your screen where you can type in questions. Okay, if there are no more questions, we'll wrap this up and let everybody get on with their days or evenings, depending on where they are. Thank you for attending. We do these webinars for our yearbooks, gold, silver, and platinum. The Platinum Group Metals yearbook launched today is the end of the cycle for 2019. We may try to do some of these later in the year for other subjects or on other occasions, and we'll keep you apprised. If not, we'll look forward to seeing you and working with you again when we do the Gold Yearbook next year. Thank you and good day.